Hello and welcome to the CWT Business Show. So this is actually kind of interesting. Normally I launch, different like podcast episodes and call it the CWT Business Audio Show, but I'm also filming this one for YouTube, so I guess it's just the CWT Business Show itself because there's a lot more than audio right now. But actually, I posted a episode from the CWT Business Audio Show, a few weeks ago on this YouTube channel, and I stated that I was going to start posting a lot more of my videos on, or a lot more of my podcast episodes on YouTube as well. And that has not really been what's happened at all. I've recorded a lot of podcast episodes since then, and it's all been just strictly audio. I think the reason for that is a lot of times when I'm making, these episodes, because it's a shorter kind of podcast, I post a lot of, or it's like I'm recording a lot of them while I'm doing something else also. Like, I'm writing, or not really writing, but it's like, I'm doing, different research on the stock market. I'm doing a lot of different like business work. I'm building, different websites. And I decide it's difficult to like film myself and record myself while also doing work also like doing work on the side. So a lot of them are just like very short episodes that I try to get out while I'm working. But I do want to start doing more on this YouTube channel because I think YouTube is something that almost everyone has access to. Not everyone listens to podcasts. Not everyone has, my podcast is on, Apple Podcasts, Spotify, Google Podcasts. So basically, like the biggest podcasting platforms. But not everyone has access to those. A lot more people, do YouTube videos. So I think YouTube has kind of been like an untapped market, which seems ridiculous to say because I've made a lot of YouTube videos, but my channel is still like insanely small. Like I wouldn't really say any of my videos have really done that well, honestly. Like, I mean, some of them have gotten, a good amount of views, but they really haven't done anything impressive. So I feel like for me and, the brand that I'm trying to build, YouTube is still kind of a untapped market. So I do want to start doing more work on there. I had a pretty interesting, topic to kind of talk about for this episode, and that is the fact that hardly any active investor beats the S&P. Actually, made a TikTok video talking about this a little bit ago, but it's actually very difficult for, someone who's actively trading to beat the S&P in the long run. Like maybe when you look at like a year basis, like actively, because I've only been investing for, a year and a half now, but so far I've definitely beat the S&P, which is, nice, but also can I consistently do that for 10 years in a rate where my average will be higher than if I would just throw all my money into an S&P 500 index fund to begin with? That's kind of an experiment that I'm kind of running on my own where every single week I invest, a lot of my money into the S&P, but also a lot into individual stocks that I fully believe in as well. And my goal is 10 years from now, when I'm 30 or 31, it'll be really interesting to see if I actually was able to do so. Like, when I actually look at the actual, like, numbers that I did, was I actually able to beat it over the long run? It's kind of interesting. Warren Buffett actually, he did, kind of a $1 million bet against a hedge fund where he just put $1 million in the S&P. The hedge fund used $1 million, like actively traded it, and they saw who would be highest in 10 years. And Warren Buffett won. Warren Buffett, actually won by quite a bit. I believe the hedge fund got like a 2.2% return, and Warren Buffett got around like 7 to 10%. I think it was 10% per year, so he won by quite a bit. The thing is, though, in which he admitted this as well, the S&P had a record decade there. The S&P did better than it normally does for that 10 years. So when because he wanted people to know that, like, yes, he won, but also keep in mind that this year for the S&P was kind of an anomaly. But when you do look at what the S&P does, average year by year, and you look at the return that the hedge fund was able to get with their $1 million, it does make it does kind of put into perspective how much better the S&P 500 index funds, like how much better investing in one of those would do than just throwing money into, or just like actively investing your money into different stocks and trading options, all that stuff. And one thing that's very interesting is that most investors do know that by actively trading, they're probably not going to beat the S&P. They do know that, and yet they do it anyway because I feel like everyone believes they're going to be they're going to be the one that succeeds, which some do. That's the thing, because some it's rare, but some active investors do beat the S&P, and I feel like a lot of investors believe that they're going to be the few to do so. It's almost like playing the lottery in a way, where most people know the math. They know there's an insanely low chance that they're going to win the lottery, but they still do it because there's still a chance. And when you look at actively trading, a lot of people believe, if they do the research, if they're willing to, put the time in, they will be the ones that win. That's kind of my thoughts, because I do still actively trade as well. I believe that since I'm devoting an insane amount of time into studying individual stocks, that I will beat the S&P 500 in the long run. I really do. But also, it's important to realize that most people simply do not. So I always tell people, and I run a financial education company, so the people that work with me, for financial help, I always tell them that most active investors who are devoting an insane amount of time to learning about the stock market are most likely not going to beat the S&P 500 in the long run. And if you are not willing to do the work they're doing, and they're not beating the S&P 500, why do you think you will? It's I always tell people, if you're not willing to actually, spend an insane amount of time, like spend so much time that the stock market basically becomes your second job, or even like, another full-time job that you have, if you're not willing to put in that kind of work, you're probably not going to beat it unless you just get, insanely lucky. And that's the thing. It's like if you're not willing to put in that kind of work, it's better just throwing the money in the S&P 500. Because even if you are willing to do that amount of work, it's still most likely better just throwing to the S&P 500. The thing is, just investing into the S&P 500 index funds, it's boring. You're looking at on average a 10% return year by year, which is boring. But there's always, I forgot who makes the quote, but there's a very famous quote that if you're having fun in the stock market, you're doing it wrong. It's supposed to be boring. So I think that's very interesting. That's kind of all I got for this podcast episode. I appreciate everyone for, listening, whether you listen on a podcasting platform or watching on YouTube. I really appreciate it. Thank you.